Good morning. This is Axel Merk, President and Chief Investment Officer of Merk Investments, with my morning update here. It's Easter Monday, and as such, much of the world is closed. So, for those of you who are listening or viewing this in the US or on the holiday in elsewhere in the world, um, just a brief update today. One of the things I like to watch is how normal, in quotes, markets are functioning. That's of course with the reduced liquidity difficult to stipulate. Spreads are wide in the FX markets, and that's just natural because of the lower liquidity. The one thing that's encouraging is I've been mentioning the 3-month LIBOR rate. As I've pointed out, the Fed of funds rate is at 5 basis points. That's 0.05%, but the 3-month LIBOR rate has been in the 130s, and it's currently, as I speak here, at 122. And so a little bit of reduced stress in the market, and so that's something to 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 kind of keep an eye on. Other than that, um, S&P futures are currently minus 40 as I'm talking, and so the question has been, have we seen the low in the markets and whatnot? And then many of the virus data are turning to be more positive in many countries. In the US, the curve is starting to flatten as well. Some countries, notably New Zealand, is pointed out several times as a country that has things under control. That's beyond, obviously, the South Korea, Taiwan countries that have been mentioned. Australia is doing better. Here in Australia, um, things are under control, but travel continues to be very disrupted. And of course, because of the long distance in Australia, depending on the industry, notably gold mining, it's difficult to get to sites. I mentioned gold mining, not because I want to give any investment recommendation, but because my audience is very interested in that. And with that, let me kind of pop in here my disclosure. So I've done that for today as well. Um, Beyond that, Minneapolis Fed President Kashkari came out and said we're likely to see these rolling shelter-in-place orders, rolling successes, and whatnot, as some regions will open up, and then we'll have setbacks and things go back down. I think I don't know whether that terminology is going to be the right one, but until and unless we have more testing in place, and not just for the virus, but also for antibodies, some variant of contact tracing in place, to kind of get on the top of that. That's things like it's a reasonable assumption. Most countries are smaller than the U.S., have a more centralized management. In the U.S., that's just not feasible. And so, as such, it is quite likely that we'll have a patchwork, and a different way of looking at patchwork. You can call this rolling back and forth. The question is, of course, at what point the economy as a whole or the global economy can start to look better. On that note, one thing that was pointed out this morning on Bloomberg Radio, and very much agree with that. If one of the things we like to point out in our research chart books, that's a little pitch here. Go to americaninvestments.com/research for chart books. We look at delinquencies. Well, delinquencies are going to lag because of the moratorium that are in place. And so you may want to look at things like the payment quota ratio of credit cards and the like, to get a more real-time look of what's happening. And clearly, the longer this lasts, the more people will be out of a job, and everybody is going to get the job back as things open up again. People have thrown out half the people will get the job right away. I don't know whether that's accurate or not, but a big chunk of people will not get the job back right away. And so one of the things that Thorsten Slok from Deutsche Bank is pointing out, let's watch the new business formations. They are down substantially, and how they will come back. Will those folks who are unemployed start a new business? We saw that a little bit in the run up to the financial crisis before 2008, as outsourcing accelerated. Well, what do you do when you have a lot of debt and you lose your job? Well, you start doing something. And so you start your little selling enterprise on eBay or whatever it may have been, right? Obviously, many more opportunities now than the mid 2000s. But the necessities of life force you to be entrepreneurial if you don't have a job otherwise. and many of those will fail, and others will succeed, and then maybe we'll have some great businesses come from that. But we'll have to see of how this economy is going to go back on track. And so in the meantime, of course, we'll have a huge drag on the economy with many consumers shell shocked, spending less, and whatnot. And so the question is whether the ripple effects, how long will we see those? And is this what we're seeing or have seen? I say have seen because S&P is, as at least as I speak here, down. Is this a bear market rally, or are we really through the worst? And I don't know. I was asked this weekend, or late last week, Friday, I think it was, yeah, um, by the investment advisor of somebody managing a portfolio for an 82-year-old who's had a conservative investment allocation of 30% stocks, whether to increase that to 50%, wanted to have my input on that. And this is somebody who has a pension and whatnot. I just thought that this is not the time to engage in experiments. It is absolutely possible that all this money spending, money printing is going to cause the equity markets to skyrocket, to blow out to the upside and whatnot. But it is just as possible for the ripple effects of this crisis to really drag on, and to have us revisit the lows or get close to them or get further down. Any of that is possible. And so, of course, if you're a speculator, by all means, people should do whatever they want, but you don't speculate with the money of an 82-year-old. And so, in this context, what I've been telling people is, well, you stick to the process, right? If it's agreed on that you have a 30% equity allocation at this phase in one's life, of course, you can rebalance within those parameters, and you probably should if that's what the process is. But to kind of dramatically increase the equity exposure because some analyst in the back office thinks we've reached a low. We're all human. This may be right, this may be wrong, but it's from hitting the bottom. But it's very wrong with regard to sticking to the process. And in times of crisis, process is good, is healthy. Now, none of this, please, is investment advice. If you happen to be 82 years old and have 30% equity allocation, do whatever you think is right. This is not for me to tell you. I'm just giving you my 2 cents as to how I look at these sort of things. Um, Good. Let me just see here. We do have a risk-off feel in the market with the yen being the strongest currency. The Norwegian kroner, incidentally, is the weakest currency. We did have this OPEC deal come out over the weekend. As I look here on my screen, West Texas is at 23.61. That's up 3.7%, and Brent is only up 1.3%. We've had a deal. We've gotten a deal. It about cut in 10% of global output is cut, and that is pretty much in line with expectations, and that's part of why we've seen a somewhat lukewarm reaction to all of that. Anyway, have a great day. Be safe out there, and I'll try to continue to give these updates. And take care. Bye bye.